everyone. Welcome to the BAI Deep Dive discussion on new customer acquisition strategies. I'm Holly Hughes, Chief Marketing Officer at BAI. It's my pleasure to host a discussion with three industry leaders on the challenges and opportunities related to acquiring new customers in 2022. I'd like to kick things off by introducing our guests. Len Blaifeder heads up consumer marketing strategy for Valley Bank, headquartered in Wayne, New Jersey. It's a $41 billion commercially focused bank with branches in New Jersey, New York, Florida, and Alabama. Len is an impassioned financial services marketer with a career that's encompassed global advertising, institutional and consumer marketing, and digital strategy at top banks, including Citi, Chase, and BNY Mellon. He's now committed to the growth and ongoing transformation of his hometown bank. Welcome, Len. So great to have you with us today.
Thank you, Holly.
Next, we have Nikhil Lele. Nikhil is a principal in EY's Financial Services Office, where he leads the digital, customer, and growth transformation business. He works extensively with financial institutions to develop customer strategies and new value propositions to drive growth and competitive advantage, and devise digital and technology strategies to help clients modernize and transform. Nikhil also leads EY's Next Wave financial services agenda, which focuses on setting a vision for the future of the financial services industry. Welcome, Nikhil. Great to have you with us as well.
Thank you, Holly.
And then we're also joined today by one of my colleagues, Karl Dahlgren, Managing Director of Research at BAI. Karl has more than 20 years of experience in banking, payments, and software industries, and his background includes leadership roles with ABN AMRO North America and a technology startup in the payments industry. Karl's team produced the most recent BAI Banking Outlook report, which surveyed both banking leaders and consumers to find the top banking trends and challenges for 2022. And in this report, banking leaders said new customer acquisition is one of the top three challenges that they're facing this year. So that's what we're here to discuss today. So let's jump in and go ahead and get started. And Len, I'll toss this first question to you. Throughout your career, you've certainly done a lot of different things, worked in a number of different places. Customer acquisition, I'm sure, has always been a top priority. How are you approaching it in 2022?
I'm going to be simple and say we're approaching it the same way that we always have, and that finding new customers still remains about location. The only thing is the definition of location has changed. I still sleep in my bed at night, and that is where I live. I have a work address, although today my work address is, as is everyone else's, more associated with their home address. At the same time, everyone else is living online, and that's where we have to expand our definition of location. So it's good to have locations that are convenient to people, but at the same time, if they're living online, we have to have a convenient banking experience. And that's from acquisition to onboarding to problem resolution. And that's where the larger banks have gotten a head start on the mid-sized banks, and we are in a rapid catch-up mode. We're also dealing with a rate environment where it's a lot harder to turn on a spigot. We used to be able to, and young people believe me on this, we used to be able to advertise CDs at 6 and 7%, even higher than that. Right now, I could tell you, younger people don't even know how to spell CD. So if you want to turn on a spigot, it's usually with cash rewards in the hundreds of dollars for a consumer checking account. And that cash incentive can easily go out your window unless you have the digitally based consumer experience that's going to drive further sales and increase the value of this customer who you spent hundreds of dollars to acquire.
Yeah, good points. Kind of that modern take on location, right? You know, it just looks a little bit different, and those incentives look a little bit different. Nikhil, would love to get your perspective. You know, you work with a number of financial services organizations on customer growth. What do you think financial services organizations consider, or what should they consider as they develop their customer acquisition strategies for 2022 and beyond?
Yeah, I appreciate that question, Holly. And to echo what Len shared, you know, there's some tried and true principles of acquisition and great service that will be as true in the next 10 to 20 years as they have been in the past 10 to 20. And the universality of doing things in a convenient, frictionless, customer service oriented way will never get old. But as we sort of are looking at an environment that spans from macro trends, inflation, rate increases in the months and years ahead, an environment where consumer sentiment about purchasing power and financial decisions is shifting, and a digital environment that will look almost fundamentally different 5 to 10 years from now than it has in any of our memories. That's going to require a shifting of strategies across the financial institutions. And what we're seeing right now is many bank and financial institution executives are taking this moment to really sharpen their focus on what it will take to drive top of funnel awareness, more consideration for your brand at large, and then adoption and conversion of the solutions that you're really looking to attract customers to purchase with you. And that strategy is shifting significantly. More and more so, we're seeing strategies that really anchor around three concepts that we've done heavy research around being more curated, more connected, and more personalized. And curated really means focusing on the audiences and the needs you serve across those audiences in much more specific ways. So it's no longer about mass product pipelines and product-based selling. It's about needs-based approaches to really understanding audiences, whether they be demographic, age-based, sector-based, region-based, needs-based, anything. That's very, very important. But that requires a more holistic approach, not a product-specific approach, because needs are multifaceted. Second is around connected. More and more so, most banks and most financial institutions don't have every solution under their four walls to offer to a customer. So the strategies are shifting around how to bring a more ecosystem-driven approach into the forefront of your proposition. How do you solve needs, some of which come from your own products, some of which you partner to acquire and or provide? And how do you do that in as fluid a seamless way as is possible? And then third is personalized. The days of mass market, spending on what I've always called the shotgun blast approach to marketing is, really being upended by fintechs, right? Fintechs in many ways have shown the industry that being a much more focused on your target segments, whom you're speaking to, and really speaking in that voice and language and in a way that resonates at the individual level is more important than almost anything these days to attract the customer to actually take the step to drive adoption for the proposition. And so underpinning this is really the strategies that banks are looking to undertake to drive lending growth, to drive deposit growth, new card acquisition, opening up new investing accounts, and a whole array of other things. So very exciting times ahead, but lots of challenges and opportunities.
Absolutely. And that comment on personalization, I think that's something that BAI has talked a lot about, and the facts that banks sit on all this data, but aren't necessarily great at mining it and using it for that real personalized, service, product recommendations, and things like that. So thank you for sharing those points. Karl, question for you, based on the research that I mentioned in the beginning, I know when we do those reports, we tend to look at the broad view as well as generational views. Would love your thoughts on, where the different generations are going to meet their banking needs and who the incoming banking competition is that we saw in that research.
Yeah, absolutely. Good to be here, by the way, Holly. So you referenced the research that we perform, and we've been doing that for several years now. And we've asked a question that we've trended over time. The question is, who is your primary financial service organization? And the options include direct banks. So those are the banks that don't have branches. Community banks, credit unions. That's another category. And then super regionals and large banks. And one of the trends that we've uncovered is that the large bank segment is actually losing some share with the younger generations, Gen Z, Millennial, and Gen X. Now, don't be deceived by that. They still have the largest share of any one of those segments, but it's trending down slightly with that group. Also, the younger generations, as you might imagine, Z and millennials, they're far more open to the digital experience only, where there are no branches. So 25% of Gen Z says that their primary bank is a direct bank, those that don't have branches. Millennials is 22, and then you just kind of move down with as folks age, right? And when you get to boomers, only 6% of boomers say that that a digital only bank is where their primary bank is. So so it significantly varies by the different generations. So that kind of tells us where they're currently banking at. But one thing that we want to look out for is just sort of what the future trends are. And we asked customers who they would consider using. And if they would consider using a non-bank. And when we talked about a non-traditional financial organization, we defined it as like Amazon or Apple or PayPal. And overall, 57% of consumers said they would consider one of these organizations. So that's more than it's the overwhelming majority of the folks. And so so that's a little bit troubling. But and then when you look at it by generation, percentages are even higher, right? With 65% of Gen Z, 70% of millennials willing to look at a non-traditional. But that we asked, would you be willing to look at one? That doesn't necessarily mean that they would actually work with one, right? And so we also asked, assuming that these big tech companies offered these kinds of financial services, who would you trust the most? And the primary, the traditional banks still get the pole position there. So they're at 56%. So there's the majority trust the traditional organizations. And in fact, it's sort of interesting because you want to take a look at that over time, right? And that their position has actually improved over time. So it was was 52, went to 56. So so there's improvement there.
Yeah, I think some, great things to be considering on, those different cuts of generational, we talked about personalization and certainly not stereotyping, but just keeping, those factors, I think, in account, are important, as well as that changing competitive landscape. I'm sure everyone is seeing that as well. Certainly we continue to be in a busy time with mergers and acquisitions of all sizes. Len, you're at Valley Bank and you recently acquired a large number of customers through the acquisition of the Westchester Bank. Would love to know a little bit more about how you're working to retain those customers and, really fully bring them into the Valley Bank fold and retain them.
Sure. We acquired the 9 branches of the Westchester Bank. It is an affluent county in northern New York. And we looked at the customer base very carefully. We also looked at what the Westchester Bank was offering, and we saw some definite holes in their product offering that we were able to fill, specifically on larger business loans, residential mortgage lending. In addition to that, merging the cultures is extremely, extremely important. There have been so many mergers in the past where the acquiring branch and the acquired branches had major overlaps in terms of their distribution network. People were let go. Consumers were dealing with strange personnel, and we're not experiencing that at all. This is a new market to us. Granted, it's an adjacent market to us, and we're able to retain most of the branch employees, which is still very, very important to a number of segments of the population. Combining that with the holes that we're filling, we're looking at this as a great opportunity to expand our business by offering new products to the space. At the same time, we're interested in diversity of our income stream. We're also in the process of acquiring the American arm of Bank Leumi. And that is going to help us diversify our income stream on the institutional side. What Leumi offers is niches in technology, venture capital, and payments. And what we are going to do is grow those businesses and grow our organic businesses by cross-selling our products, which are needed products, into this group. Overall, we've been looking to grow using the curated audience approach that was mentioned. We have new segments in homeowners associations where we are working with them on their deposits, their borrowing, their cash management, their money movement. We also have expanded into cannabis-related businesses, which is a new niche. Not everyone wants to dive into that, but we are, and we're doing very well working with dispensaries, cultivators, wholesalers, pretty much everyone in the chain of distribution other than Jay and Silent Bob.
That's great. And hopefully that will continue to go well for you, but it sounds like a lot of great points for, people that may be listening that are in the middle of this, some things to consider when they're in that, M&A, time frame. Nicole, I'd love to go back to you, for something you talked about with those ecosystem partnerships. Can you talk to us a little bit more about how they can be used to the benefit of acquiring new customers?
Yeah, certainly. And Len, I love the movie reference there. Always brings back memories. And, the deal environment, first and foremost, is going to remain very hot. And so we're going to see continued M&A, continued consolidation, especially amongst the smaller players to reach some size and efficient scale for them to serve broader audiences and make the required capital investments really in digital and technology. But more and more so, we're seeing our clients gravitate towards strategies that are and, not or. So they're going to continue to focus on strategic deals where they present themselves, given where valuations are. But partnerships represent an entirely new facet of growth for most financial institutions. Now, let me caveat, partnership is not a new concept, and most banks operate sometimes hundreds of partnerships in many ways across different vendors and platforms and capabilities. But what we're really talking about now is something fundamentally different for the industry ahead. And that's what we call mastering partnership business models. So this notion of extending the value proposition to your end customer through a partnership ecosystem is really a vastly different execution approach than just saying, I'm going to go to XYZ loyalty or merchant partners and offer some interesting deals at right moments of time to my customers. We're not saying those are a wrong thing. We're just not saying that's what partnership ecosystem is. And so what we're really showing through the research we do with clients, through the strategies we see them enacting, is when you find unique ways of extending the proposition of your bank to bring in partners in very, very curated and targeted spaces, whether they be in banking or payments or lending or loyalty ecosystems, or even in the planning and investing space, et cetera, there is a significant amount of incremental acquisition that becomes available to most banks that didn't exist for them otherwise. It's because consumers who are in the market and addressable are actually open to a trusted financial institution providing an integrated proposition to them with full knowledge that not all of the products are theirs. In our latest research that we published last year, over 60% of consumers, and this is across all age groups, there's no age group that is an anomaly in this statistic, say they would highly value, if they're a trusted financial institution, integrated other partners into the proposition and delivered it to them in a seamless way. Now, in industry jargon, we call that executing on an open banking strategy and APIs. But what we are now seeing is that it's so much more. You need a full-scale business model around supporting partnerships at scale, because when one partnership becomes 2, 5, and 10 partnerships, and partnerships start cycling through, and the nature of the propositions that you're seeking to deliver through your ecosystem continues to evolve, just having APIs with a contract is not sufficient to actually generate monetizable value and an adequate value exchange between the bank and the partner itself. So it's such a more complicated space, but one that most institutions have not yet focused their full sights on mastering. And that's why we see this as a tremendous opportunity for most institutions, because It's in mastering business models where our data shows that there's at least a 40% lift on acquisition potential and new revenue growth opportunities that present themselves just by virtue of the fact that you can be an expert in integrating and mastering delivery of that business model to your end customer.
Yeah, it's really interesting. And thanks for sharing that research as well, because good to understand the business opportunity as well as the customer's receptiveness to it. And it's probably all about them just wanting the best possible service at the end of the day, I would think.
That's exactly right. It's
Yeah,
all
it's
about
interesting.
value to the consumer, and more so because we as consumers engage immersed ecosystems every day of our lives.
Mhm.
We're as open now in financial life to engage those kinds of ecosystems as we are in any other part of our life. So now the financial ecosystem has to evolve into being that fluid, that connected, that personalized, and that curated. And that's why I started with that in our initial question.
Yeah, definitely, definitely. So last area I'd like to, probe on a little bit and get your take on, and I'll start with you, Karl, but then we'll, go to Len and Nikhil as well. But certainly there's been a lot more emphasis within financial services on ESG. They've been at the governance part for quite a long time, social, the diversity, equity, inclusion initiatives, and then seeing, more happening on the E side. BAI actually has a couple of different executive roundtables in these areas where we're bringing together those senior leaders focused on these areas, and really encouraging, I think, to see the priority and the process or the progress being made in those areas. And, Karl, I know this was also something that we asked about in the BAI Banking Outlook research in terms of consumers' views on, that factoring into their decision making. So would love, your thoughts on that. What we saw the consumers say about the importance of a bank stance on DEI and ESG, and, any thoughts too that you have on what banks should be doing in terms of talking about what they're doing in these areas.
Well, certainly DEI and ESG are important to consumers, especially the younger generations. So you referenced the research that we did. We went out to thousands of consumers and we asked them if they'd be willing to switch financial service providers for one that was more committed to DEI and ESG. and quite a few said they would. So, and again, I touched on generational information previously. 58% of Gen Z said they'd switch if they found a financial service organization that was more committed to DEI. That goes down 2 percentage points for ESG. So you got 58% for DEI, 56% for ESG. And then when you go down to the millennials, it's really the same, only 2 percentage points lower on each one of those categories. So either one of those generations are willing to switch primaries, for those that are committed more to those things. It changes again when you talk about generations, because when you get down to the boomers, those two numbers are 16% and 18%. So they don't factor it in quite as much as the younger generations do. The other thing is that we've also looked at when looking at a new primary, can you rank what is important to you, right? So we looked at what the top 4 things are, and positive reputation shows up in the 2 younger generations and not at all for the older 2 generations. And so while DEI and ESG aren't necessarily the only factors in positive reputation, they are important factors in that. And so for those younger generations, they're looking at this information, and it is important to them when they're picking out a primary.
Yeah, that's great. Thanks for sharing that, Karl. And certainly see multiple benefits to it, but it's really interesting to see that, rising importance as a consideration with those younger generations. Len, I'd love to get your take on it too, whether it's the customer side or the employee side even. It's the great resignation or reshuffling, whichever buzzword we want to use. And, the employees have a lot of power right now in terms of where they want to work and how they want to work. Anything that you're seeing, at your bank in terms of ESG or DEI?
Absolutely. So earlier on, I mentioned that younger people today don't know how to spell CD, but they do know how to spell ESG, and they do know how to spell DEI. And I have not interviewed one person under the age of 30 in the past couple of years who have not brought up these topics as an important point of consideration. So if you want to continue to attract and grow talent, you better be paying special attention to it. I'm not positive whether it's the same on the customer side. On any day you could read stories about sneaker manufacturers and their labor practices, but at the same time, their sales are doing pretty well. It's important as corporate citizens that we do the right thing in terms of the environment, in terms of diversity, in terms of investing in our communities, because it's okay to say we're diverse and post for Martin Luther King's birthday. But unless you're going out into the communities and showing your commitment, you're going to get called out on it. So
Absolutely.
You better back up your words.
Yeah, really, really good points. And I would say we hear similar themes with our executive roundtables and leaders talking about that. And on the ESG side, that concept of greenwashing and, kind of going out there and doing things that on the surface may seem like they're the right thing to do, but really don't honor the true spirit of ESG or DEI. So thanks for sharing that. Nikhil, any perspectives you would add, what you're seeing from your vantage point?
Yeah, really just to more, add to and maybe offer some additional perspective around this. So, we do significant amounts of growth strategy work with different clients across the financial ecosystem. And one of the things we study greatly is what are the mechanisms that drive consumer demand and exactly how can you capture that demand through your propositions and the way you go to market and your service and experiences. And when you decompose that level of quantitative insight, what you start to see is that there is a fairly large distinction between generations, as both Karl and Len have just stated, but to the Gen Z, audience in particular, they are 3 times more likely to be attracted to an offer and a proposition if it contained aspects of ESG and or carbon footprint and or social consciousness related features, right? And so we don't see that level of sort of acquisition potential with other generations. And even then, when you decompose that and you start to look at more specific needs for that Gen Z population who is just now in the market to start their first jobs, they are 4 times more likely to actually adopt a proposition from a bank if that proposition included very tangible, real features related to ESG, DEI, other social cause related, things. And what that really shows us is this can make a huge impact to both consumers as well as the success of the banks themselves. But the big hurdle that the industry is still now at the forefront of trying to figure out is how do you take broad interest and turn it into specific action? And that translation from interest to action, right? And that's the trick between using these features and ways of getting to market as acquisition vehicles, because ultimately you're going to attract those folks who really have an interest in taking action and having their financial lives tied to those actions. But we're seeing the younger generations absolutely be at the forefront of this adoption trend. The next generation, we're not going to be talking about this because it's just going to be merely expected. And that's going to be the evolution that we'll continue to see.
Yeah, I think, based on all of your comments, it's the right thing to do for so many reasons. And I think a good place to end here, I'm sure we could, continue to go on, but Nikhil, Len, Karl, thank you so much for sharing your insights. I think you have given people, a variety of things to think about, some of the classic, customer acquisition strategies, but how they are modernized right now for 2022, really and beyond. And some things that if they're not quite on your radar or prioritized, maybe they should be moving up. So thank you so much. And also thanks to everyone who's tuning in, and really want to encourage you to visit BAI.org for additional BAI research and thought leadership on this topic, as well as other key issues that are facing the financial services industry. Thanks again, everyone, for joining us, and have a great rest of your day.
Thank you.
Great to be here, Holly.